Hi, I'm here with Brett Frevert, Managing Director of CFO Systems. Brett, please tell me about CFO Systems and what you do.
Sure, thanks, Paola. CFO Systems provides the financial leadership to the middle market across America. That means the CFOs and the controllers that the middle market companies need, either on a short-term or a long-term basis.
And how long are these typical engagements? So you said short-term and long-term. How can it typically range?
Our short-term engagements would be the more traditional, easy to see and understand interim situations. So often a middle market company or any company, a controller or CFO will submit the resignation with the 2 or 3 week notice, and obviously there's not an ability to get an employee replacement in 3 weeks. So we'll step in for the 90 days, 180 days, 3 to 6 to 9 months that it takes to properly recruit and backfill with an employee situation. The long-term engagements are really our bread and butter. That we use the term timeshare. The long-term part-time engagements that might last 2 years, 3 years. Our longest thus far has been 6.5 years, where we worked with about a $7 million technology company that the company did not need a full-time CFO, but they really needed a part-time person in there.
Great. So these are typically companies that are just hiring your staff part-time then?
Correct.
Okay.
Correct, yeah.
And is there a specific industry focus, or do you focus on a certain size of companies that you work with?
We're industry agnostic, so we work with virtually any industry here in the Midwest, everything from high-tech to biotech to cattle feeding, manufacturing, construction, medical practice, a couple of service industries. We can work with literally any industry. Size of the company, again, we really like the middle market and lower middle market. We found that there are just literally hundreds upon thousands of 10, 20, 40, $80 million companies that need some financial leadership, but they don't really need it all day, every day for week after week, month after month. Those middle market companies have the same month-end issues, the same leadership issues, the same investor and banking relationship issues, but they just don't need a true CFO on a day-to-day, day-in, day-out, week-in, week-out basis. So we can step in there and we'll be there half a day a week, 2 days, 3 days, 6 days. It's really a variable cost and can really vary from week to week. So there might be some pretty intense weeks where there are bank meetings or auditors or shareholder meetings, and then there are times when they just don't need a CFO in there for a couple of days.
Sure. And now how would you, or what role would you play if we were dealing with an M&A transaction? So how would you help out during that transition period?
Sure. Now keep in mind, we are the CFO or controller. There are other entities around the country that provide consulting and give some advice and do this and that, but we really roll up our sleeves, get in, sit at the desk, supervise the accounting department. We oftentimes have a signature authority with our clients, and so in an M&A situation we do the same thing an employee CFO or controller would. So if we're on the acquirer side, we'll build the models, we'll do the due diligence, we can help negotiate, we can secure the financial package. And if we're on the seller side, then a sweet spot for us is to really engage well before the M&A period, the due diligence period, and we can really get the company much more suitable, much stronger, get a good presentation, really have a lot of the stuff ready to make the whole M&A process go better.
And Brett, can you also tell me more about your financing services?
Sure. We've got a branch that we call CFO Capital. CFO Capital really works with our clients to manage that right side of the balance sheet everything below accounts payable, whether it's a bank line of credit, bank term debt, investor debt, any mezzanine financing, which might be preferred stock, subnotes, anything on that right side of the balance sheet or off the balance sheet. One of the areas we do very, very well with is equipment leasing. And a lot of the middle market companies don't fully understand or fully respect the power of the leasing industry.
What do you mean when you say that?
Well, we run into situations, for example, in December, we were invited to a board meeting with a potential client that was looking at about a $3 million project expansion. All the numbers were drop dead easy. For $3 million, they would have about a 9 to 15 month payback, 3 to 4 quarters, and the controller in place was concerned because he couldn't get bank financing. And so we said, well, have you looked at leasing? And he said, well, that's so expensive. And I said, what do you mean? And he said, well, they charge such high rates. I said, not really. If you look at equipment leasing compared to a bank, and the pure interest rate is probably going to be higher, but a leasing company will finance a lot higher percent, and the leasing, the ROI on a lease is incredibly high because your investment in a piece of leased equipment is so low.
Great.
And so we the board gave us approval to go through a process, look for some financing for the project, and it was pretty easy to get 3 proposals from funding sources.
Wow, that's great.
It is. So they'll have the equipment in and running by May 1 and kicking out profit by June 1.
Nice. Great, Brett. And I have one last question for you. Tell me your predictions for your company in the next year.
In the next year, we will probably double or more in size. We continue to find that the middle market just absolutely loves our model. The ability to bring in some pretty serious leadership horsepower without investing in a full-time position is fantastic. Our market, or our marketing efforts, are really directed towards those trusted advisors for our potential clients. We work directly with the bankers, lawyers, CPAs, the insurance brokers, other advisors that know their client, they know they have a need, and they also know that we can step in and fill that need on a short-term or a long-term basis.
Great. Are there any other specific ways that you plan on doubling your business?
We're always looking for additional cities to move into. We're headquartered in Omaha. We do have a history of going all the way from coast to coast, but the majority of our clientele are in a 3-hour radius. We would really like to be in Minneapolis, Chicago, Denver, Kansas City, and are looking at those. The challenge, of course, is in a professional services environment, you really have to find that right person. And we're very, very particular about who to bring on board.
Great. Well, Doug, Brett, I wish you luck with that. And I thank you so much for sitting down and meeting with me.
Thank you. I appreciate the opportunity. Good luck with Fundology.
Thank you. If you're interested in learning more and connecting with Brett, go to fundology.com.